Aloha Internet. Welcome to the Bubbles Stock Market Open Show for the great day of Friday, October 24th, 2025, 8:10 a.m. Eastern Standard Time. We have a little over an hour before the stock market's going to open. Are you starting your day here? I hope you are. In fact, I'm going to put a link. I think it's going to pop up here right at the 1 minute mark. So we're at about 50 seconds into the video right now. Get ready. This link is going to be coming up if you're interested. It's coming up right at the 1 minute mark. Get ready. Get ready. It should be coming up right around now. It should be coming right in there. Why, grab that link. Watch that video later. I'm going to put a link to a video that shows how this has kind of been my secret weapon. This in conjunction with dividends and option premium has really come together quite well for me to be able to pay all my pay all my living expenses via doing stuff in the stock market with those things. But just making money without knowing where that money is going and how much money you need to make and what's your budget and those type of things. It's I don't know if it's possible or how. It's definitely much easier. We'll put it that way. You want the easiest way of being financially independent through the stock market, you should start right here. Make sure you're going in here, filling in. I did this already in my real account. Sometimes I lead by example, hopefully in productive ways. So what we would generally do. Now, if you have a better accounting system, better bookkeeping system, go for it. This is for like the worst case scenario. Like this is for the people that are, I don't have any money. This is free. Make a YouTube account, and if you tell me you don't have internet access, I don't know how you're watching this, but anyways, there's just some things when it comes to money you have to figure out for yourself. You got to get that internet access. But generally, what we're doing here is how many ever accounts you have. You're gonna log in. You're gonna start keeping track of what's the status of your accounts and watch that video. I'll probably make more things on this specifically, but this is really crucial if you legitimately want to be able to pay all your bills from the stock market, or if you just want to use the stock market to help you buy some new things and things like this. Put some trust into the fact that oftentimes in order to win a game, it is at least easier to keep score. That's it. At minimum, it's easier if you keep score. It's easier to win if you keep score. And so this is a way that you can keep score. Now, looking at the MMRI, went up a bit. I think yesterday it was around 44 or so. So it's didn't really move up that much, but we can see is an actual uptick here on the chart where so from yesterday it was 245. So right now bumped up 2 points to 247. It's something to keep our eye on to see which way is this going to go. Is it going to stay right here, or is it going to start creeping and creeping up here and giving us a bit more of a problem? The old Schiller PE ratio is still high, and it's probably worth noting that this appears to have been updated October, so sometime this month. We see the mean and the median is closer to 17, 16, and here we are up here at 40, which in a way is basically saying stock market is expensive at the moment. Doesn't mean that you can't get a good deal in the stock market, but generally speaking, kind of broadly means that the stock market is expensive or people are paying a lot for stock. Something along those lines. Here is another another view into the same thing, the Buffett indicator. This is, and this was updated today. Well, thank you very much, BuffettIndicator.com, for your timely updating. Basically, you can read about this so you can get the full details of it. But this is also telling us that at the moment the stock market is kind of overpriced, kind of overexpensive. Speaking of updating, here's an example of not updating. We're looking at I mean, what are you guys doing over there? You're talking so much that you don't have anyone to update the website? Come on. I don't know what's going on behind that, but I think they're setting themselves up for easy jokes like that. Those are low hanging fruit jokes because I mean, seriously, what are you really doing at the Federal Reserve over there in St. Louis? It's not like you're making widgets. It's not like you're manufacturing something. What is it you're doing? You're looking at computers all day. Come on, you can't log in and update your WordPress. Come on. And I know it's probably not WordPress, but hopefully you're laughing at that joke. Okay, so we're still looking at the same sort of unemployment numbers over here at we claimed that was updated in September, but I don't know. It could be user error on me reading this. It really could be. But because it is seemingly stuck here, frozen in time capsule of the alleged unemployment number of August 2025, I decided to pull this up. I did a search for what's the net layoff rate for 2025. And I left it like this. We got the BLS. People make a joke that is like the BLS. It's the BS. Another low-hanging fruit there. Um, but I saw somewhere here, there's a lot of, we're looking for, where did it go? I thought I saw something down here. How many people are laid off in the United States each month? It looks like this seems to be a warning, warning. There's we see that overall but maybe there's always, layoffs happening. I thought I saw a specific, oh, okay, maybe it was this layoffs mid-year review. Let's see, oh, the first 6 months of 2025, an 80% increase from the same period. Let's see if I click on this, if it's gonna hopefully open this up to exactly, okay. 2025 layoffs, a mid-year review, and what that means for the workforce. And specifically, the reason why I'm looking at this is that when people are employed at, generally speaking, most jobs, they have an opportunity to take some of their paycheck and put it into like some sort of, maybe like employer matched 401k or some sort of retirement plan that oftentimes leads that money to the stock market. Of course, you could say, well, there's this, there's that, and you're right, there is. And I'm right too, that both of these things are right at the same time. Generally speaking, when people have jobs, some money flows into the stock market, and sometimes it could be quite a bit. But anyways, that helps keep the stock market up, though. It helps. It's flowing money in. Anytime there's buying, it's helping push the price up. If people like all of a sudden, if the mass amount of people didn't have that same thing happening, it may not affect the price of the overall stocks or the price of the overall stock market. So I mean, what the heck? We're a bubble stock market show. We gotta talk about something. So we're trying to talk about productive things here. As we approach, I'll do better at reading these before I'm live recording from Muskegon, Michigan. 2000. Okay, layoffs total of 2025 is already a record year. Okay, an 80% increase from the same period of last year, just short of 65,000, short of the entire layoff of 2024. So when was this printed? When was this? June 2025. So it's obviously probably has grown since then. The U.S. In the US alone, job cuts may reach almost 100,000, up to 47% year over year, signaling a rapid accelerating trend. The tech sector continues to be a major contributor with over 62,000 employees laid off across 284 companies in the first 5 months of the year. Major tech names Google, Microsoft, Intel, Apple, LinkedIn have all announced significant reductions. You know, something that I just learned, and it's not about these numbers. I just learned that LinkedIn is a major tech name. I didn't know that. I didn't know that LinkedIn. I didn't know that all you have to do is, have a like social media site and have it geared towards the professional working class. And all of a sudden it turns you into a major tech name. Maybe it's not all of a sudden. Maybe it took day after day, week after week, year after year, or month after month, year after year to become a major tech name as a basically social media site for professionals. And I get it, it's probably pretty helpful. But nonetheless, I didn't know they were considered to be a major tech name. I mean, they're definitely not in the Mag 7, but whatever. Who knows? Not a FANG stock, FANG L. Key drivers behind layoffs, economic headwinds, tariffs, funding cuts, global economic pessimism are forcing companies to slow hiring and reduce headcount. That seems believable to me. Pandemic overhiring. Many firms expanded aggressively during the pandemic and are now right sizing as demand normalizes. Okay. AI and automation. The rapid adoption of AI is streamlining operations, but also displacing roles, particularly in tech and startups. Cost cutting and restructuring. All right, so we could keep going into that. Speaking of AI, maybe it's at least worth saying, bringing it to the conversation and saying that there would, with a disclaimer that there would probably need to be a lot more thought or research, data accumulation into this. But some people would say that, oh, maybe what will happen, or they might say what will happen, is that this greater productivity of these companies from AI and automation is going to be a counterbalance and offset. And as the productivity and the um, the profitability of these companies increase, it's going to offset any potential uh, drag that less money flowing into the market might do. And I mean, both kind of make sense, but it's ultimately kind of like in that those two things, just those two things, without adding in anything else. It's kind of like an arm wrestling contest in a way, like which one is going to be stronger, which one is going to be more powerful? Is the greater increase of profitability from AI and automation going to outweigh the uh, lowered amount of money flowing into the market? I don't know, and I probably don't care enough to sit around and try to figure it out. But just quickly coming to my mind, if lots of people are losing jobs, and not only does it limit the amount of money flowing in, like if you don't have a job and you're not doing that, putting money into your 401k and you're not getting that employer match, not only is that happening, but could it also create situations where not only is money not flowing in, but people in these situations need to sell shares to raise money for whatever they need to raise money for? And could that happen? So there's like a kind of a double, the 1-2 punch that the AI automation tailwind needs to like somehow figure out its double punch. That's probably uh, that's probably the silliest way to describe it. What else do we got here? Okay, so we looked at all that stuff. We got to be careful. Let's just get rid of all that. Let's over here. Let's look at the put to call ratio, which I already looked at, and it sort of seemed kind of the same. And I found us a little thinkorswim hack here. Right now, I've got the full put call ratio for Chicago Board of Option Exchange, just the equity pulled up. and we see it's at 6.89. Yeah, it's up a little bit, but I guess a little bit under one is normal. Oh, look at this. Let's just take the E off. Bam! Now look at this. We can look at all three at one time. All from the CBOE. We got the total put call ratio under one just for equity, closer to 50, but I think it moved up a little bit from yesterday, if I remember correctly. And then just for the index, over one. I'm not sure if that's any cause for alarm or anything. And one of the beauties of the bubble stock market show is it's forcing me to look at more information and make figure out what are the correlations between this information and how can I not only hopefully deliver some entertaining education to you, but also become a better person in the stock market myself, hopefully. So I'll keep working on understanding these correlations better, but seems relatively normal. Let's look at our main financial charts that I personally like to look at. What I consider the markets. Other people might not, but these are generally all futures, except for this one. I think it's an index. These are all futures, and even though it's an index, sometimes I see a trade. Like right now, I just saw a trade, so it's moving. Nice. So let's quickly go over this. We got the dollar via the Dixie, gold, silver, Bitcoin, uh, crude oil. These four are S&P, are stock market indices, futures of those. And this is the VIX, futures VIX of the stock market. So the stock market, we see this candle, which has been trading while I was sleeping, and we're at the top of the range. We're still kind of battling this top of the range. And, it would be wrong for me to say I predicted this. That would definitely be wrong because I don't have any video to show you that I predicted it. So it would be wrong. It would be misleading. I feel like I would be letting myself down. Nonetheless, sort of fraudulent to you folks out there. However, I can say that I'm not surprised. Can't prove that I thought this would happen. But the reason why I can say I'm not surprised is I might have something surprising for you. The stock market can only go three ways. Now I know some people say they add two, they add they make it to five because I think they're looking at how far it's going one way or something. But let's not get that sophisticated. Keep let's keep our understanding as basic as possible. Up, down, sideways. That's it. So why should we be surprised if the stock market is battling to the upside when it tends to go up over time anyways? You can see that very easily here. Let's look at SPY. And let's move over here. 15 years. I mean, overall, it tends to go up, right? It tends to go up right around those all-time highs again. So we're dealing with something that tends to go up. There's only three ways it can go, up, down, or sideways. We saw in the MMRI over the course of X amount of time that the bubble stock market show launched, that and even before the bubble stock market show launched, I wouldn't I don't think you should necessarily trust me, but you can if you want. For every for I don't know how many months, or maybe it's years, I've been looking at the MMRI pretty consistently. And basically, we got the MMRI kind of going down under these volatile times. Granted, it's a little bit of an uptick right now, but if you go five down and two up, you're still a net down by three. So that's kind of what I've seen going on with the MMRI for quite a while. And and although I don't really particularly care to listen to the videos of that Gregory Mannarino puts out, I think that he really does understand the stock market pretty well. I think we just have a little different of something. I don't know what it is, but it seems to work pretty well. It seems to work pretty well. And then there's that going on, and then there's also my a new person that I've been learning from, not that long. I don't know how many months it's been, but I've really been paying attention to the free content that Mike Norman puts out on YouTube. And from what he was saying, what the MMRI was telling me, even though there's a lot of other things that are like looking bad, like the stock market's going to crash anytime, we're overextended, we got all these problems, and those things are true too. It's like it's amazing how you can have multiple sort of contradicting things true at the same time. Isn't that kind of amazing how nuanced life is? So here we are. I'm not surprised. I am not surprised. Now, here's what I have been struggling with myself for I don't know how long. And maybe struggle isn't the right word, but I'm gonna go, hey, where'd you go? I'm gonna say struggle, even if it's a little bit dramatic. I'm gonna add some drama to the day. Usually people for a show, people sometimes like drama. Like what was that, Jerry Springer? That people like that show quite a bit. This is the stock market, bubble stock market show, so we got to add some drama a little bit. So I'll say I've been struggling with, I would say, at some time in the past, I started kind of saying like, well, I think this might happen, and sure enough, it happened. But you know what I'm struggling with? I'm struggling with making money out of these predictions every single time. Not to say that I'm not making money. I am profitable in the stock market, but I want to be more profitable. So I'll be more profitable, be sharper on figuring out ways to extract income out of the market when I have an idea that might be right. How can we set up a trade where you can speculate and sort of limit your loss on that? Oh, it might be called the butterfly to get better at those butterflies. So let's see. We got 1 hour chart, and from left to right it's 1 day, but it's a little misleading. It'll say 1 day, but it's really like 1 day right here, and then you got the before market hours and then after market hours over here. So S&P 500 via SPY, we're trending up at, pre-market. VIX trending down. Service now, which you folks might not care about, but I'm still trying to get paid on the put side here. So it's not trending away that I can get some better premium on the put side, but it's still in a range where I don't feel like my short call is compromised. CrowdStrike moving up nicely. IBIT, BTCI, looking strong. It's really easy just to kind of look at the moving averages, and we still see a certain amount of moving averages kind of intertwined, going sideways, like this one. SMCI, Coca-Cola, FCX. Palantir is doing it a little bit, but it see it wasn't really doing it. Now it's back over here. Once it turned to be Friday, kind of start doing the sideways thing. Robinhood, whoa, look at this. We're getting some, look at this big candle here on Robinhood. 1 hour candle. You can see that on gold as well. Ooh, MO though, we're selling off. Selling off. VIP. Oh man, I might have to really drink some courage juice and maybe buy at least one share if it gets down here 64, 63. That would be great. Anywhere in there, I might I might force myself to buy something. All right, Oklo, look at this nice moving average. These look at these lines here and these moving averages nicely spread apart. Start dipping down here, boom, start going back up. So, oh, if I were to tell you that I don't have a crystal ball, that would not be true. I actually have two of them right here, and I have like a crystal plate that the two crystal balls are on, and I have kind of like this crystal. I don't know, it's not in a ball shape. It's in a regular crystal shape. So, I can look into my crystal balls here and I can see, since they're kind of transparent, I can kind of see to the other side of them. However, I can see stuff about the stock market a lot better if I'm not looking into the crystal ball, if I'm actually looking at the stock charts. And so from looking at the stock charts and trying to maybe I'll pick up this crystal ball and look at a stock chart through the crystal ball. Let me see if that helps me out at all. I can actually see the chart a lot better when I don't put the crystal ball in front of my eyes and I just look straight at the chart. And so what I am, okay, if it seems like, hey, you're scared to commit to something here, okay, you're right. You are right. I am reluctant to commit to something here. But what I'm gonna do is I'm gonna commit to I'm gonna weasel out of the commitment. If if the futures markets keep this upward momentum, then we're probably gonna have an up day in the stock market. That's about the that's about the most I'm gonna stick my neck out and risk on a prediction. And I also will predict one thing. I will predict two things. And these ones I'm willing to wager money on. Let's say this. I'm willing to wager money that at 9:30 a.m. Eastern Standard Time, the stock market's going to open. And I'll go one prediction past that. You can call me Nostradamus in the comments. At 4 p.m. Eastern Standard Time, these markets are going to stop trading. Done. Done. And I'm standing by that. You can take that to the bank. I'm predicting that the market's going to open 9:30 a.m. Eastern Standard Time. It's going to close 4 p.m. Eastern Standard Time. Don't think this is one prediction. It's two. Just two separate ones I'm putting together. Isn't that amazing? That's what I saw in the crystal ball. Okay, with that, we probably got some other things to do. Welcome, ladies and gentlemen, to the end of the trading week. Friday, October 24th, 2025. Bubbles Stock Market Open Show.